Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. Mastercard remains technically bearish in my view. In the last video on the 13th of September, I said that there were multiple tests at the support trend line and mostly ended in rejections. The latest rejection over here was in mid-September, and that led Mastercard below the 20-week simple moving average, which has since kept its advance. The rising wedge remains valid and has a textbook target at 432.40. I started coverage on Adobe on the 25th of October and noted the formation of a descending triangle, which is a neutral pattern, and the outlook will be determined by the direction of the break. Adobe broke below the support trend line this week, and it is now technically bearish. The textbook target of this pattern is at 219.05. I last covered Hermes on the 6th of September and stayed bearish on it. Since then, Hermes has extended its rebound, which I believe is the correction phase of the cup and handle top, but eventually failed to hold above the cloud. Hermes has since closed back below the cloud and held below the support of 2097. I believe the bearish resumption phase has begun. The textbook target of the cup and handle top is pretty low at 1239.5, but there are supports at 1639 as well as 1895 that can bounce price action higher. Moving on to SAP, software and application giant of Germany, it is at risk of completing a cup and handle top, a bearish pattern. Price action attempted a rebound, but was rejected by the 20-week simple moving average and has since closed back below the cloud. Downside bias, I believe, has prevailed. A weekly close below 209.1 will complete this cup and handle top, and a textbook target is at 130.38. I turned technically bullish on dollar stocky on the 11th of October due to completion of a falling wedge and highlighted the three phases of a bullish chart pattern. After the video, dollar stocky expectedly went into a correction phase, bounced off the cloud support and went into the bullish resumption phase. With price action holding above the cloud, a bullish outlook is still appropriate, and the textbook target of the falling wedge is at 10.4244. Now the latest price action suggests the formation of another bullish pattern, which is the cup and handle bottom. I believe this bullish pattern was completed on the 4th of November, and the textbook target is at 9.9540, still lower than 10.4244, but this cup and handle bottom serves to affirm dollar stocky's bullish outlook. Dollar NOK is also developing like dollar stocky. I turned technically bullish on this cross on 11th of October due to completion of a falling wedge that has a textbook target at 10.7680, and I believe it has also completed a cup and handle bottom bullish pattern on the 4th of November as well. This one has a textbook target slightly lower at 1069.61, which also serves to affirm dollar NOK's bullish outlook. Moving on to names that I will begin covering in future videos, starting off with Microsoft, because I suspect that it may be forming a double top, a bearish pattern. If you recall, just last week I ceased coverage on Microsoft because the cup and handle top back then was invalidated. In that video, I said that Microsoft should head lower first due to two reasons. Firstly, due to the get ups. Second, due to overextension above the upper Bollinger. I caution that decline could lead to the formation of a double top. Price action, I believe, is now biased towards the downside because it has closed below the Ichimoku cloud. This double top will be complete if Microsoft closes below the neckline at 492.37 and the textbook target is at 430.1. Similar to Microsoft, Bayer, a German pharmaceutical giant, may also be forming a double top. Price action clearly decline after closing below the Ichimoku cloud and downside bias is preferred. Closing below the support at 24.8 will complete this bearish pattern that has a textbook target at 19.84. Last but not least, I am starting coverage on Alibaba because I suspect that it has bearish potential. Recent price action suggests the formation of a cup and handle top. Note that the latest close below the 20-day simple moving average is the second time Alibaba has failed to hold above the 20-day simple moving average, a sign of lacking upside strength. Closing below 153 will complete this bearish pattern that has a textbook target at 119.9. Moving to names that I'll be no longer covering in future videos. First up, Amazon. I propose that it may be forming a double top on the 18th of October, but price action rallied above the second top last week, invalidating this bearish pattern. But from a daily chart perspective, we can see that Amazon on the 31st of October gapped higher, and my take on gaps is that eventually, not always, but usually they will be partially or fully filled. Therefore, I think Amazon will be headed lower first before moving higher going forward. I will be ceasing coverage on Eli Lilly as well. I said that Eli Lilly completed a head and shoulders top back in July, but this bearish pattern has been since invalidated after rising above 935.63 this week. Moving on to Novo Nordisk, I will be ceasing coverage on this name as well. The potential cup and handle bottom was invalidated last week after falling below 328.55. Last but not least, I will cease coverage on the Kiwi dollar. I began covering on this cross on the 28th of July, noting the formation of a head and shoulder stop, which was completed on the 30th of July, and a textbook target was at 0.5866. This textbook target was 100% reached on the 14th of October. Then, on the 18th of October, I identified the formation of a falling wedge, which was eventually completed as well, but Kiwi dollar failed to push any higher above 0.58. Since then, Kiwi dollar has declined and invalidated this bullish pattern. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.